Hope you're well and doing great as we wrap up another really incredible week. I think yesterday was one of my favorite sessions. In yesterday's session, we talked about I gotta refresh the page. Hold on one second. Bum bum bum. Are we late cycle? And when we talked about are we late cycle, and we talked about the macro cycle, we talked about monetary policy, we talked about how the Fed is restrictive, whether it's QT, whether or not it's the elevated rates, Fed funds. And we talked about the only thing holding back what was looking to be a turn to acceleration of growth right now is the Fed. I'm going to go ahead and just jump over here and pull up the macro cycle really quick. And you could see that, like, we're seeing earnings are improving. PMIs, they're mixed, but they, after coming off a long time, we started to see like the evening out of the PMIs, the stabilizing, and now above 50, looking pretty good over there. We're seeing a lot of things pointing to actually we could see a re-acceleration of growth. And the one thing that's preventing that right now is obviously the Federal Reserve and monetary policy. And you have to wonder, or I'm wondering, is it too late? Is it too late? Today's jobs data obviously was a wake-up call. Look, I started off, and I'm not going to comment yet. I'm not going to be able to absorb it yet. I looked a little bit under the hood, but I want to give this a little time. The numbers seem so drastically off that something seems not right to me, right? Is it gross incompetence when you have that magnitude of revisions over the past 2 prior months? Absolutely. Is it the chairman who is indeed too late? We're going to find out. My only concern is when the Fed cuts is whether or not they're going to be cutting into normalization and or a recession. A lot of people seeing today's jobs number are like, it's clear as day. They're cutting into a recession. It's not that clear, and there's a lot of nuance. In yesterday's session, the difference, you can look at the difference whether you're looking at a normalization cut, and then you look 3 months, 6 months, 12 months out. Look at the difference when they begin cutting compared to a recession cut. And whether you, especially 3 months out, but even 6 and 12 months out, you're substantially in the red. It really matters whether they're cutting into normalization and or a recession. And that's what we're going to try to stay in front of. And I don't think it's easy, or there's anything easy about it. And I think that a lot of people yesterday, we were looking like, when we were looking like, what's going on? Are we indeed late cycle? Are we going to see monetary policy, which is restrictive, actually trump and cause a further, and people can't take it? Jordan, you said that the 4-year cycle's broken. And you've been saying that since January 2022. And here we are, and a lot of people are noticing it different, but a lot of people think that we're about to melt up and we're about to see Altseason and the banana zone, and then it's going to be bear market in 2026. Which is it? Look, like, I'll tell you in a second. I'll tell you again and again and again. I'm here each and every day to absorb the nuance and then go ahead and position accordingly. I will continue to stay on the right side, and that requires lots of flexibility. If you live like this is not for you. You're not going to make it. I look at all sides objectively. I have no problem with it. You could see that we've looked at recently, we've looked at what, are you prepared? Are we seeing signs that Bitcoin is topping from a 4-year cycle perspective? And I gave you other analysts' view that are saying that in the next few months, we're going to be topping. And I really had you be aware of what could put up. And I talked about invalidation points, and unfortunately they're much lower. And unfortunately for me, it would be really late by the time those triggered. So we've looked at, from more of a swing trader's perspective of where that most recent breakout and leg up, where it would be invalidated and where we would see further pressure. And that's what we're here to do. I think it's appropriate to start off today's session with a little bit of head snack, and the markets are not crashing. We're going to go ahead and start here. Macro could change rapidly.
markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices.
I think it's really important here today to reflect on the fact that the markets are not crashing. I heard a doomer. You got to imagine at one time they're going to be right. At one time they're going to be right. I'm going to just go ahead and just jump over it. And I saw Thomas over here bringing up a very important point, and he's just talking about if you zoom out, let's zoom out over here, and it's clear that we are seeing diminishing volatility, especially downside volatility, whether or not you look at the low of the bear market, 76% compared to 84%, compared to 85%, or if you look at in the bull market, ever since the bull market breakout, 17,250, I bet you were bearish, and I know you were. As was the whole field, coming FTX blowing up. Everyone is talking about really scared. And we're talking about December 2022. It's on the channel, on the YouTube channel. Bull market breakout prediction, 17,250. And we've seen a massive difference in downside volatility, 30% corrections during the bull market. For sure, downside volatility is being suppressed. There's a lot of bid into the market. You see that bid coming from the likes of like Saylor. This is really funny. You have to listen to this. The question comes about him buying up all the supply, and someone like literally, like, it sounds like they blow out their coffee. Like they're just listen for it. And then the interviewer is like, "Oh, God bless you." It doesn't sound anything like a sneeze. Go ahead and listen to this.
Is there ever too much Bitcoin for you to own? Like if you could own all of it, would you?
I don't think we'll get all of it. I don't think in the range of 3 to 5 or 3 to 7% is too much. BlackRock has got more than
I
us.
just wonder. I was thinking about the mental exercise of if you could actually own all of it. Like if you would.
Do you hear that?
Well, we started and we had very little, and Bitcoin was 10,000, and now Bitcoin's more than 100,000, and 97% of the Bitcoin is worth 10 times as much, and somebody else, not us, has it. Right. So as a practical matter, what we're doing is we're monetized.
He's talking about wanting to own up to maybe even 7% of the float. He thinks it's a good thing. 10x. Listen, 10x from here is look, Bitcoin's going. It's going to $1 million, and it's not stopping there. That's a 10x from where we are. That's a fantastic and timely reminder to make sure in this next phase that we're in, you are serious about dollar cost averaging, because the next 10 years are going to come and go, and then there will be no really opportunity to dollar cost average in for, to gain some a position, a nice position into Bitcoin. Taylor was basically just saying, was the volume very too low, not even able to hear? I don't know, this Twitter thing where, as I have it full up. He was talking about, they're looking to buy anywhere from 3.5 to 7% of the float. And he was asked, like, are you going to buy all the Bitcoin? And someone, like probably the camera guy, was like spitting out his water or his coffee, like, and she's like, "God bless you." But yeah, could you imagine he's even being asked? But there's a massive bid into the market, and the bid has changed, and that bid is from the likes of flows into the spot ETFs. Here's where the flow started right here. Court decision. Grayscale could roll over their fund into a spot ETF, and you saw the breakage of the 4-year cycle as adoption caused a new all-time high before the halving instead of after the halving, as in every previous cycle. Since then, we've seen a massive move in adoption. Corporates are continuing here to stack. Even Coinbase is finally stacking sats, roughly $250 million last quarter added to their balance sheet, now becoming a top 100 corporate treasury holder. And now we see the likes of 21 entering the fray out of nowhere, Metaplanet, and they all have big plans. And this is the new phase of adoption that we're in. Now, does that mean that we're not going to see any are we going to see reduced volatility on the upside as well? And again, if we have an adoption event to the magnitude of a Bitcoin Act being passed by the United States of America, planning on buying something like 200,000 Bitcoin for 5 years, you are going to see not only massive front running of that. How do you front run that? Well, they're saying they're giving you a schedule, what they're going to be through legislation, what they're going to be purchasing. Every single speculative investor and country will be out there trying to front run those purchases. That would be a bid that would change the descent of the angle. Right now we have an angle that looks like this. In the past, look, you have an angle like this, and then you move up to an angle like this. This one's harder to see because of the COVID global lockdowns breakdown. And hey, events like that could happen. By the way, what happens when you have a crisis cut? When you have a crisis cut, as you saw in March 2020, 12 months out, S&P 500 on average up 17% a year later. Crisis cuts are easy to navigate. The one coming up will not be. The one coming up, it's a really strong question. Are they cutting into a recession, or are they cutting into a normalization? And I think this is appropriate to bring up over here. Treasury Secretary Bessent is saying, listen, with the one big beautiful bill passed and 100 expensing locked in, America is experiencing a CapEx comeback. AI is accelerating, productivity is rising. If the Fed had any imagination, they'd embrace the Greenspan model. What happened during Greenspan? This is so funny, because the golden age of America is behind us. Remember, the Fed is the one who is keeping us restrictive here, as the US government is trying to engineer growth to go ahead and get the debt to GDP in a much better place. The Fed is the one that's holding back that agenda. Treasury Secretary Bessent said is, well, remember what Greenspan did? And then I'm reminding you, because the similarities are just striking between the two periods. Let me jump back over to here. And this top deviation you're looking at is 1998. Greenspan, what does that do with Greenspan? Greenspan was chairman over here. What happened the year after this? 1999, mega bull, ending in obviously the acceleration towards the final third of the bubble. What happened in the previous 2 years? Just like the previous 2 years, S&P 500 had 20% back-to-back gains. What happened over here during this particular year for both of them? 20% drawdown. A lot of people looking for that. The markets just crashed. That was the dip. Did you buy it? The president told you to buy it. I mean, he has pretty good track record. The last time he told anyone to buy the dip, if you remember, was back in 2018 when the markets had that mega correction. It was December 26th, I believe. And he's like, you should buy stocks here. And boom, sure enough, here we are. So, the markets did just have a strong correction, 30%. We looked at very recently, I think it was last Friday, we looked at how often do markets have a correction of a magnitude of 20%? How often do they have a correction of 10%? And then we looked at, how often do they have a correction back to back? The earliest that we could find, there were about 2 events of it happening 11 to 12 months apart. That's the earliest it's happened in the past 100 years. It would be very uncommon to see back-to-back corrections of that magnitude. Now, there are other things that are obviously unusual about these markets, including right over here. You could see that markets at a new all-time high, open and close at the low. Opening at the new all-time high and closing, it doesn't really happen here. I don't know what day of the week that is. Okay, that's a Tuesday. So that doesn't really count. You would need 2 days in there to get that in. But it happened again yesterday. And yesterday we were just talking about that was a wicked reversal taking place. People are trapped. Not good for our positioning whatsoever. Giving back a lot of profit today. Today's profit give back today. You can see NVIDIA off 1.5%. Still up 23%. Tesla out of the market. Shorts having a little bit of fun on the 1 hour. TQQQ giving back a massive almost 5% down to 26% open position. And FNGU getting absolutely wrecked and crushed. Late entry now down 4.6%. And then we continue to see IBIT out on the sidelines. And I just want to look over at MicroStrategy and just really applaud that exit. And you can see MicroStrategy out of the market. And since then, it has been a big sell-off. Obviously, you all aware of the news that MicroStrategy does not plan on going ATM. And, you know, I'm going to say diluting shareholders. And if you're supportive, you say, well, doing it for the benefit of gaining more Bitcoin. We have a long-term vision here. But nevertheless, in the near term, it definitely suppresses price. They're saying if the NAV is below 2.5%, we will no longer do that. We're just not going to do that at all. And that should give the opportunity here for share price to have the opportunity to move upwards, depending on the price of Bitcoin, obviously. And for MicroStrategy price to go up, we're going to see Bitcoin is going to have to hold this leg. Sustainable channel that I was talking about, right? And if we were to see some type of adoption event, I think that we would move into the next phase of this sustainable channel, which has held since 17,250 bull market breakout. This is the invalidation line we've looked at the whole time. We continue to hold. We're just in the middle of it now. If we see some type of adoption event, this will change, I think, and look something. I don't think it's going to go vertical. I don't think it's going to be, here's one, and then it accelerates up into a second, into a third. I don't think that we're going to go, we're looking for blow off top behavior or anything like that. I do think that, though, you would see a change in nature. For now, it remains, right? For now, it remains. So that's something we watch. If it breaks to the upside, which definitely would say, and if you saw it break to the upside in the next few months, you know, that's 4-year cycle behavior. We're not seeing 4-year cycle behavior right now. Setting up a lot of potential hidden bullish divergence across the board with this. Well, that sounds sexy. That sounds good. Seasonality show August, September as red. So, you know, a lot of people, not a lot of people, very few people, the people who, you know, I don't know what to say. But yeah, we've been setting that up. And specifically in this video that we recently did, have we come too far too quickly? Here's last Friday, double dip. History says that's not how it plays out. And then we went to, do I think the markets have come too far too quick? And we really focused in on the seasonalities. And we talked about how, I mean, that's a sharp move down. And you can see it in relation to here. Look, in 1998, the other outlier we're looking at, you could see that very similar price action during this period of unfavorable seasonalities. And that's all we wanted to do was set expectations into this unfavorable time. Now, here you could see it's just playing out completely on time. And that just means in this period, right, I expect sideways chop. And I wouldn't be surprised if by the 15th of August we were higher, except now, after today's price action, that would be a surprise. We'll look at the price action on the NASDAQ in 1 second. And obviously, the first 3 weeks of September, that's when you could see or should be looking out for pressure. And it doesn't mean that it's going to happen. We just wanted our expectations to be in line with what seasonalities suggest. Let's go back. Let's look at the price action over here. And yeah, that looks like a nasty reversal, as we were noting yesterday, 22 hours ago. Nasty reversal taking place. Follow the price action, stay on the right side. By the way, there was 2 things over here as far as the jobs numbers. And again, I'm just, it was so off, and I'm just giving it a second here to kind of digest. But we are seeing a lot of native-born American workers jumping 2 months in a row. 383,000 added in July, following an increase of 830,000 in June. That's like 1.2 million jobs of American-born workers added, and you are seeing a lot of foreign-born workers tumbling now for the fourth month in a row by a total of $467,000. Ace also adding that the government workers over here, federal workers monthly change, and you could see ever since the Trump administration has taken office, offering people the opportunity to leave to get a payout, and you've been seeing the government. Look, I think we're all in favor of small government. I think we are all in favor. I know I've been for a long time. Silver and gold, by the way, gold is under the jobs data today. Signs of weakening. We're watching that hard data. I'm very concerned about whether or not when they do cut, it's into recession or normalization. Again, I showed you that Besson is like, come on, we need a Fed chair who's going to play ball. That's the wild card. That's the wild card, is what happens if you get an extremely dovish Fed chair in there, and in 2026 the stars align. And you know what, like we looked at yesterday, for sure the weighting between what's taking place with fiscal dominance, monetary policy, and that battle that's taking place. And it's too soon to say who's going to win. I'm voting on the growth, but it's too soon with certainty, especially when you're dealing with numbers like this. It's hard to navigate when you can't trust the numbers. Gold over here looks like it's challenging getting back neutral after the breakdown, retest, resumption back into what we gave the neutral area. And gold is probably and likely keying off of, like, licking its lips. It would like when the Fed begins cutting rates. So that's what we're seeing taking place on gold. Moving over to silver. I mean, yesterday, a week ago, this is on a weekly bar, last Friday, we're saying that looks like an ominous candle. I won't be surprised if it tests higher, which it did not. It's almost just a clean sell-off. Nevertheless, the chart pattern definitely taking hold. I wonder, just a really quick look, and this is as clean as you get. First of all, here's the support. Here's the resistance. This is a breakout on a weekly chart and a retest of that line, and then ultimately failed. And you can see the bodies here wicking. Silver, if it breaks down this support here, then likely it is going lower. As long as it holds, this continues to look very good. I think that's a great. What's up, CTM? Big shout out to the silent majority replay crew. Why do they admit how much debt? So they're not. I don't think anyone's admitting. I think that from my understanding of the big beautiful bill, that it's conducive to growth over the short term for the next few years, and long term it's an absolute disaster. It's kicking the can down the road. It's making things harder for the future generation, in the hopes that they're going to be able to engineer growth and grow their way out of the current. They don't have any other option. They don't have any other option. And what's going to happen is ultimately it's going to fail. Ultimately it's going to fail. But between now and it failing, there could be some significant growth that takes place. I'm talking like .com bubble, right? Call it what you want, AI bubble. They both led to massive productivity gains in the future. That's what the internet was all about. The internet was ultimately all about increasing productivity everywhere across the board. And I think that's what AI is going to ultimately be. The question is, before you have like the realization, is there, what type of speculation's taking place? It's hard to say, and we've talked about this. It's 2 years ago that all these people in spaces were saying NVIDIA is overvalued, it's going to crash. But the spending and the purchases of their hardware, it continues, right? I love being here with you guys. it looks like gold is getting ready, about to negate that breakout under this rightfully so conditions. Massive. You have to be able to adapt to the data, and the data here, we were just throwing a curveball. Revisions, massive revisions on the jobs data last 2 months. Is the data fake? I I I think so. I think it was fake under the Biden administration, and I think now it's fake under the Trump administration. And is this what they're doing in order to get the Fed to have no choice but to play ball and cut? That's why it's tricky. Are they cutting into a recession, or are they cutting into normalization? I don't really know. Trying to figure that one out. Boom. So Ethereum, the question was just really quick because it's Friday and we're just going to cover it all. And I'm enjoying the flow of today's session. If you are too, throw some love out there. Hit that like button, smash the channel. The question was, where will Ethereum be in 2028? I think in 2028, regardless of what happens over the near term, it's why I gave that data point, by the way, because you never know. Like, there could be a recession, obviously. And if there's a recession, I've been very clear in yesterday's session in the pinned video on the YouTube channel, Bitcoin will not respond well in a recession. And it's something to watch out for. But here's the thing. If we enter into a recession, the policy response from the Fed, from the Treasury, is going to be something that's more of like cutting into a crisis, right? I think my worry is deflationary slow motion bust. But as we move towards 2028, I've said to you repeatedly and very early that the cycle high, you remember as the 2024 halving came into play, and all these people were like, it's going to be a left translated cycle. The cycle high is going to come a lot closer to the 2024 halving, and then we're going to enter in bear market. And I was like, no, that's not going to happen. The cycle high is going to be a lot closer to 2028 than the 2024 halving. Yes, what happens in between is what we navigate. But as we move towards 2028, let's assume that Bitcoin is trading somewhere around $250,000. Where does that put Ethereum, I think, is the question. I'm going to go to 2028, and, I would say what I'm doing is we talk about, and it's weird for Ethereum. This is hype cycle. This is facing reality. I'm trying to like, is this hype cycle like this? And that's the correction in hype cycle. And then is it facing reality like all through this? And good reason to have facing reality scares during this period. Solana was like, everyone, look what Solana's overtaken Ethereum. Today, I don't think that you have that same conversation anymore. I'm not hearing it. It possibly, potentially, but you are seeing moves of, obviously, now corporate saying, I like that Bitcoin play sailor has gone ahead and executed. Not engineered. He wasn't the one who engineered it. Go to the Nakamoto Institute and check out some of the pieces that some of these OG Bitcoiners put in. They're the ones that engineered it. Saylor talks in 2020 that is where he got his Bitcoin education. Interesting how this all plays out. But nevertheless, is this the facing reality phase for Ethereum? And is it indeed about to break out of it? I don't really know, obviously, but this is the questions I asked myself. And if it is, and Ethereum is able to break into its ultimate market opportunity, and maybe it will, maybe it won't, right? We got all eyes on 4,800. I guess what I'm assuming here, we're trying to make the assumption that in best case scenario, and that leads to obviously a walk towards the highest deviations over here. This is not Bitcoin specific. This is not crypto specific. This is simply adoption specific. And a lot of people get it very wrong as you go, like recency bias. You focus in on, diminishing returns. You're not focused on exponential growth out of the adoption curve. And yeah, I mean, is 10 to 12,000 or something like that very possible? If you use this line over here, this zone over here as the top portion of the deviation as you move into 2028, you could have some very high numbers. I mean, 15, 16,000 is very, very high. Look, there's so much that's going to happen between now and then. Let's see if Bitmine is the only like corporate treasury. Let's see if others start accumulating. If you're seeing corporates accumulate to hold as a long-term asset, that's going to go ahead and help supply demand dynamics. There's too many unknowns. I don't know. I think that's the most bullish, reasonable expectation I could give. And I think it's incredibly bullish. So a subdued one. Things are working out. Bitcoin is where I plan. It's still very high. 12,000. That's a good question. Which one is right? And that brings it back ultimately to, obviously, the best and ultimate way. I personally believe, like you could look at Bitcoin, right? And on Bitcoin we have multiple amazing templates for execution, including Bitcoin bull runs. And when you're in a bull market, Bitcoin bull runs is outperformer. We're getting so ridiculously close, by the way, as we're moving into August, into the release of V4 here, and then it becomes a no-brainer. And our Bitcoin template on V4, it outperforms every iteration plus Bitcoin bull runs. So that's coming very soon. But there is the question of like your auto trading. You have all these algos just automated. Is like if I trade Bitcoin, do I use an even allocation amongst all of them, right? And ultimately you don't know which is going to outperform in the near term better than the other. That brings a healthy form of diversification. So as you're looking at Ethereum here and you come over and you bring up trying to get my eyes on 2.0. So very, very, very close here to an exit. So the difference is on this. Let's check it out. Sorry about that. I have Bitcoin bull runs in the middle throwing me off over here. CTM 2.0 is out of the market, I guess what you're saying. So very nice exit. If you compare the two, and I've done the performance of the two, I believe, Michelle, that they're almost neck and neck. Now that's without being able to go from toggling off ST2 on Ethereum, whether or not you're in a Bitcoin bull market or not. And I imagine, like, even though these two are neck and neck otherwise, I'm talking about like full on performance. I think that you have the edge here with the toggling of ST2. Very interesting. I mean, BNB treasury companies, and you got to wonder, like, once we get to what I will call, I don't want to call alt season, guys. Alt season is a very short window where alts, the majority of alts outperform Bitcoin, and it happened. The last time it happened was in May of 2021. It didn't happen in November. So 4-year cycle is broken. Check it out. It didn't happen in November. In November 2021, Bitcoin and alts peaked at the same time. That was a first. If you go back to the top of 2017 of Bitcoin in December, alts don't peak for a few weeks later. And they continued running hard against Bitcoin. It's legit alt season. You come back to the next top in April of 2021, Bitcoin tops, and then you see alts continue to run. In November, that doesn't happen. That was another sign that the 4-year cycle is changing. And a lot of like, and just for clarification, alt season is a very brief period. It's not 2 or 3 months. It's 2 or 3 weeks that it has occurred in the past. And is that going to happen again? I don't think so. However, we could get a very favorable speculative phase for altcoins, and there will be plenty of times that we do. And will it be select altcoins? I mean, does it start with the first top 25 and then go down the line towards more mid cap and then low cap? Likely, but that's likely not until we see. Again, this is, I think, the best indication of when Altseason is getting ready to pop off. And I just don't think that it's very well recognized. So let me bring it to your attention. And that's when you see the PMI expanding above 55 to 56. That's the period where it sets off. Look over here, 55, 56. Look what alts are doing as that happens. Come back to this other period over here. PMI hits above 56. That's when alts are expanding out. That means that the economy is running well. That means that there's room for further speculation out there. And we're not there now. With the magnitude of the altcoin market, though, yeah, be selective. But yeah, I think it's a very good thing. Are we bullish or bearish for August? That's a great question. Let's go ahead and just be very clear about it. Let me look for this one. And let's just jump back over to here. So coming into August, before the last week of July, we set up expectations coming into August is that we're cautious. We don't take profits, right, ahead of our system getting us out of the trade. And we'll find out what happens, right? Today we're giving back decent amount of profit. About to get stopped out over here. I mean, yesterday it was looking amazing. Today it's looking anything but, right? TQQQ, how close are we to exits? Let's take a look over here. So on TQQQ, you can say, well, we're getting close to an exit. So again, this is interesting. So let me first give you the TA and then we'll come back to that. So are we bullish or bearish into August? We were cautious coming into not only August, but ultimately through the last few weeks of September. We've had a couple of things change today. We have today the extension of further tariffs on certain countries, as well as we had these Fugazi job numbers. And that's something for the market to digest. The question is, do we go from like cautious during this period of time to outright bearish at any point in time? And I don't think, again, this would be different if we were to see a 20% correction come just after 1 in April. That would be first time. And there's a first time for everything. It could happen. It's not what my expectations are. We talked about what it would be for a 10% correction during this period of time in that very video. Have we come too far too fast? And yeah, the 10, 11% correction, which is a legit correction and is well within the cards. It could happen. I'm looking over here. I'm just going to draw a little line over here. I'm coming off of this March swing low that was ultimately taken out. And then I'm connecting it here to this May retest over there. And you can see I like this line because you have support. You break above tiny here. It's resistance here. It's support here. And you can see that actually maybe it's just maybe that's a lot cleaner and as close as you could get. And if you check this out, that line I'm drawing in, that random line you could manage risk about, right? If you take that out, you then wind up taking out the 2025 previous high, the December high over here. I'll just draw for a second. I don't like those horizontals, but I'll draw for a second. And so just so you know what I did, by the way, I'm looking for where that resistance is. I know a lot of people would draw it up over here, but I'm like, okay, we gapped up there. We lost that level. That's the resistance right here. And look, it's a perfect touch right there. I think that's precise. I think that's correct. And if you were to lose this level, so you have the purple line, and then you have the horizontal, Thomas, I thought you were a scammer for a second. I saw a bunch of, I saw a coin with all those letters and numbers. I thought you were a scammer for a second. If we break below this area right over here, that's going to be a jumpy moment. That would be, what type of correction is it into there, by the way? Not really much, right? Into the high 6-7% correction. If we break there, I think I talked about like a little sensational yesterday. I was like, oh, traders are trapped, right? People are trapped. The only people that are trapped over here are bad day traders, I guess, right? That's the only people that are trapped over there. It's not, people are not really trapped over there. I think, by the way, there are some things that I meant to bring into the conversation, which are timely, and I didn't do that. My fault. But I wanted to bring out the fact that, like, we talk about, first of all, retail being legendary. It was retail, then CTA, and then ultimately hedge funds. And they were late. Retail was early, but CTAs are 100% long. All as they could do going forward here is going to be sell. And, you know, if you get some technical breakdowns could get further moved down. If you look at past times when you make a new all-time high, let me zoom out a little bit. This is a big one over here. So actually it's pretty clean. That's interesting. That was the April low. I don't know where I was. That's so interesting. But I was looking for when you break out over in January 2024. It was just a retest, and it was a clean retest. You didn't have any jerky price behavior below it, like you do over here in 2020, when you're able to finally break out above the previous high. You have it move up, and then like a shakeout below. But if you were just drawing pretty lines, which we did back then, but at that point it didn't matter. From April on, we were like, you cannot sell. This is uber asset inflationary. But if you had a line and it looked something like this, it's very similar to what I just did with the line I just showed you, right? I came off of that low. I then came into where it tested support. And you could see that even after breaking above to new all-time high in this shakeout, it wasn't tested. So that wasn't that hard, I suppose. Looking for other times, you've broken a high over here. So that's a big shakeout. That's a really big shakeout. Let's go just for the fun we're doing today. I don't know how to do that actually. I don't know how to do it, so I'm not doing it. That's the right way to do it. And there you go. That sets up the next piece of the conversation. I believe it. I just never saw it. God bless you, Chio. Lots of love. Yeah, so few people were able to see our session yesterday, and I thought it was one of the most important discussions out there, everywhere in the financial markets. It was unbelievable. We are so blessed to be where we are. This is very important. This area over here, I don't want to go back and forth, so I'll start here and then I'll go back. But if once you have a breakdown, you know what we do. We're looking then for where comes the next buy impulse, right? So you never know how far this is going to extend down. A lot of people might have thought you were going to test the December lows over here. I don't know. But point being is you always want to manage your risk. And if we get a breakdown versus this level that I'm pointing out over here, and this is a confluence, right? This is where I think bears have their opportunity. Are you going to be able to push this a little further? This seems like a pretty strong supply zone. That looks like a pretty decent correction into there. Let's go down and, you know, again, we looked at this last week and we said, you know, I guess the markets ended up a little higher, but we were talking about 11% correction. Markets went up 12% correction. That could happen during this period that we're entering between now and the end of September. It's going to take some significant, doesn't look like her repair is being invalidated today. It looks like that nasty reversal candle is definitely accelerating down. If we get a breakdown at that, like a breakdown from this level, at that point, we'll be looking for repairs, because for sure, right side will continue to be, riding the short momentum. That's where the bears have that opportunity. You got to look for where you're wrong. Bringing that back to where we are right now, there's a little space here, right? And there's even more space from that last little, where we found that support area, like into here. And if we break that area, you could see, well, that we'll be exiting our T-triple-Q. And yeah, I mean, 35% profit on T-triple-Q would have been a lot better, but 20%, okay, is a good little trade. And if you look at what our average trade is, average winning trade is 26%. It would be a little below average if we closed it out at 20%. No big deal. What about with NVIDIA? NVIDIA also getting close here, if need be, to lock in some profit. I imagine it's well under an average trade here. Average winning trade is 23%, 22%. So almost average, and that's if we lose the areas we're talking about. So it looks fantastic. It looks good. And that's where we are. All right, everyone. That's a fire session. I love CTM. Friday. Way to go, everyone. Have a beautiful weekend. Rest up. We're back at it on Monday. God bless you all, everyone. Have a beautiful day.